Libya sits at a critical juncture. It is a vast country, mostly desert, with a long and beautiful Mediterranean coastline. Its location has always been important, a bridge between Africa and Europe. For thousands of years, trade and empire have shaped these lands, from ancient ports like Leptis Magna to modern oil terminals. The connection to the wider world defines its wealth and struggles. Understanding Libya today means tracing a long, dramatic economic history. Tripolitania, Cyrenaica, and Fezzan. 3 regions, 3 economies. West oriented to the Mediterranean, east tied to Greece and Egypt, south opening to the Sahara. This is the story we will trace, era by era, decade by decade. We begin with the earliest inhabitants, the Berbers, survivors of a harsh land. Chapter 1, Berbers, Phoenicians, and Greeks. Long before empires, the Imazighan, the Berbers, mastered survival here. Semi-nomadic herding, barley and wheat on coastal plains. Around 1000 BCE, Phoenician traders founded posts, Oea, Leptis Magna, Sabratha. Greek colonists in Cyrenaica founded Cyrene and turned the Green Mountain into farmland. Wheat, olive oil, and the prized silphium became important exports. These goods moved across the Mediterranean, a coastal exchange network that lasted centuries. From 146 BCE, the Romans built roads, aqueducts, forums, and latifundia, large estates for export. Leptis Magna flourished, a cosmopolitan port enriching Rome with grain and olive oil. Wealth flowed out. Gold, ivory, and slaves came in, oil and grain went west. Rome controlled caravan routes via fortified frontiers to tax trans-Saharan trade. Intensive farming and climate shifts led to soil exhaustion and creeping desertification. By the 4th-5th centuries, Roman control waned. Urban life shrank. The 7th century Arab conquest integrated Libya into the Islamic world. Trans-Saharan trade revived. Gold, salt, and slaves linked sub-Saharan kingdoms to the Mediterranean. Coastal cities often remained marginal, ruled by distant dynasties. Rule shifted among Aghlabids, Fatimids, Almohads, often governed from Tunis, Cairo, or Marrakesh. From the 16th century, Libya fell under Ottoman influence administered through local pashas. Piracy, the Barbary corsairs, became a state-sponsored revenue source. Captured cargoes, ransoms, and tribute enriched elites but did little for broad development. By the 19th century, European navies and industrial power ended the corsair economy. Centuries of fragmentation left Libya underdeveloped, setting the stage for the colonial era. In 1911, Italy invaded Libya, starting decades of violent occupation. Fierce resistance, led by Omar al-Mukhtar, turned colonization into long guerrilla war. The Italian campaign was brutal: deportations, concentration camps, and dispossession. By the 1930s, Italy built roads, ports, and settler farms, modernization for settlers, not Libyans. World War II turned Libya into a battlefield. Infrastructure was devastated. Ports, roads, and farms were destroyed. Millions of unexploded mines remained. Mines would maim and limit development for decades. After the war, colonists fled and Allied administrations governed until UN trusteeship. In 1951, Libya became independent under King Idris. But poverty remained severe. Most lived on subsistence agriculture. Per capita income was a few dozen dollars a year. Leasing bases and foreign aid sustained the government while oil exploration continued. Geologists kept searching the Sirte Basin. A discovery would change everything. In the early 1950s, Libya had about 1.2 million people and very low per capita income. Then, in 1959, the discovery that changed everything. In 1959, Esso struck oil at Zelton 1 in the Sirte Basin, high-quality, sweet crude. Its proximity to Europe made Libyan oil extremely valuable. In 1961, the first Libyan crude tanker set sail. The oil era had begun. Over a decade, Libya transformed from extreme poverty to rapid growth. 1960 GDP, $0.38 billion. 1965, $1.3 billion. Rapid expansion. By 1969, GDP reached $2.9 billion. Per capita incomes rose sharply. Rural exodus, idle farms, and growing cities, dependency on oil deepened. In 1969, a young officer, Muammar Gaddafi, overthrew the monarchy. Early 1970s, nationalization of oil and stronger revenue sharing with foreign firms. Joining OPEC and the 1973 oil shock multiplied state revenues. By 1979, GDP approached $28 billion, a decade of boom. Oil-funded free education, healthcare and subsidies, a new rentier state. Gigantic projects like the Great Man-Made River symbolized state ambition. But private enterprise stagnated, inequality and corruption rose. By 1980, GDP peaked near $40 billion, mostly driven by oil prices. Revenues funded foreign adventures and a growing security apparatus. By the mid-1980s, foreign confrontations would start to bite. Next, sanctions, decline, and a volatile late 20th century. The 1980s marked a turning point for Libya. Confrontational foreign policies strained relations with the West. The 1986 U.S. bombing damaged infrastructure and morale. Lower oil prices in the mid-80s further weakened the economy. 1985 GDP, $30.4 billion, growth stalled. The 1990s brought UN sanctions over Lockerbie, crippling oil exports and investment. Spare parts and technology imports were blocked. Domestic industry suffered. By 1999, GDP hovered around $37.1 billion with stagnant growth. Smuggling and black markets filled gaps left by sanctions. Healthcare and education deteriorated in parts of the country. In the early 2000s, Gaddafi renounced WMDs and sought normalization. Sanctions lifted, international oil companies returned to invest. A mid-2000s boom saw renewed construction and rising consumer spending. By 2005, GDP was approaching $49 billion. 2008 marked another high. GDP around $87 billion at peak prices. Promises of liberalization were slow, corruption and state control persisted. A generation saw wealth but limited opportunity. Seeds of discontent. When the Arab Spring erupted in 2011, Libya's tensions exploded into revolution. What followed would shatter the state and the economy. The 2011 NATO-backed uprising toppled Muammar Gaddafi and shattered the state. Civil war fractured institutions and shut down oil production. In 2011, GDP plunged by over 60% as oil output halted. A power vacuum spawned competing militias and rival governments, all fighting for oil revenues. When ports were blockaded or pipelines sabotaged, production collapsed, then rebounded during truces. 2012 saw a sharp rebound when fields reopened, illustrating extreme volatility. Public services collapsed. Civilians bore the cost in displacement and hardship. Banks fractured, currency devalued, and inflation eroded savings. Example: GDP fell to about $29 billion during 2016 fighting, then rose to $51 billion in 2018 when oil flowed again. By 2024, GDP was roughly $46.6 billion, with per capita around $6,300, far below peaks and fragile. Floods, neglect, and conflict have compounded economic contractions. But when peace holds, oil, still tilted 95% of exports, provides a lifeline. Libya is a nation of paradoxes, vast wealth, weak institutions, and a fragile social contract. The next chapter depends on lasting peace, unified institutions, and real economic diversification. The wealth beneath the sands remains immense, but unlocking it for all Libyans requires what the country has lacked: accountable institutions and unity.